Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda, as usual, we'll go through a market update, and then Shawn has some great presentation to go through as far as the earnings results from the last quarter. So that'll take a majority of the time here, and obviously ask questions as we go along. Just kind of the plan for the next few weeks. So next week I'll go through like a quarterly update for how the studies are doing. And then the week after that, we'll be ready with the next earnings plan. So, we get a 2-week break here between earnings. And I think there's a few in between there, but nothing, only a couple. So, so that's the agenda, and let's get started. Okay, overall for the market, we look at all the different states. So Russell, I don't know if you know, a couple of days ago, that popped back into state one, from 4. It's a little unusual to go from 4 to 1, but, as we've always said, with state modeling, any symbol can go from any state at any point to another. So it can go from 1 to 8, or typically, we talk about the patterns, go 1, 2, and then back to 1, or 1, 2, and then 4. So, Russell went from 4 to 1. It didn't, do anything else, like go to 3 or something like that. So a little unusual, but nothing, out of the extremes that we see. So so we'll get into the analysis of the Russell and obviously the other indices here in a minute. Overall, we look at the pie, definitely has got a lot more green from last week, and that just kind of coincides with Russell going into state one. A lot of the symbols are going back into state one, that popped up, getting near the overbought, kind of 45 threshold. So we're right around that neighborhood right now. But obviously it's been a good push, for the market here. And let's take a look deeper into the market pulse. All right. So the state 1, state 8 comparison, obviously we made a new high here. Let me zero in a little big. As far as state ones, we had that drop down to 25, and then a straight B line, had a little pullback, even though the market didn't really kind of follow that, just kind of kept churning. And now we're back up to 40, almost 44. So a little higher than the last one. So that's a new high, and so a higher low and a higher high. And I would say the best thing is, these state 8s have turned over too. Let me kind of, we're down around 9%, pretty much gone straight up to, 23 area. And then it looks like it's turning. So that's a very bullish sign. We're getting things coming out of state 8. So that's definitely, a bullish sign right now. We are getting kind of near the typical overbought area, but that's just kind of like a general guideline. It's not like a strict, 45 in state 1, like in 45%, you don't go short to market. It's just, kind of a general thing that we use to piece together where things are going. So that's just one kind of indicator. The other one we like to look at, the new lows here. So, we had a little spike back there and, a couple weeks ago, and now we're back down to flat line, 70 new lows. So nothing going on. And I just like to scale out. We had a little pop here, and now we're just flatlining. So that's very bullish. When we're flatlining, things are going up. So, obviously, keep monitoring that, but let's take a quick peek at the just overall bullish bearish. So this just takes into account all the, just adds them together. So The green line's going to be, like state 1, 3, 5, and 7. And then the red line's going to be 2, 4, 6, 8. So all the bear states and both added together, and all the bullish ones added together. So, we had a little crossing, had a nice drop here. I'd say this is definitely, this kind of low below 30 on the bullish is definitely like an oversold area from, some of the research I've done. We get down that low, it's definitely oversold, just kind of for future reference. So we had a straight B line up, flipped over and then, crossed over again. So now, it's pushing up higher. I think if we're getting up in the 70 range, it's definitely going to be like an overbought type thing, but we're kind of in the middle of things here, and there's not too much to garner as far as like these. I know they're slow moving, but they just give us a general sense of, okay, we're definitely overbought, or we're definitely oversold, or we're somewhere in the middle. And I think we're in the middle, kind of trending towards that overbought right now, as far as market pulse. So let's take a look at the actual indices here. SPX been crushing it. If you got in on March 9th, you're doing really well. It's pretty much straight up and keeps going, and it's off the chart as far as any kind of support, as far as what we have here on the targets, the support and resistance. So not much to garner from this, but I think our key indicator, and I know I sound like a broken record here, but that 50-day SMA, it's just been our tried and true indicator. Until that's broken, I'd just I'd stay bullish, with looking for these kind of little opportunities, where it comes back down close or touches. I mean, this one, we've been talking about this, I don't even know how long, months. When it touches down there, it just takes off like every single time so far. So until that's broken, just stay bullish overall. And you see this little dips, keep buying those until it's broken and turns against you. So that last one will be a losing trade when you're trying to buy the dip. But if you've been doing it for God knows how long, I don't remember. Shawn, do you remember when we started talking about the 50-day? It feels like it's been like the whole year almost.
Yeah, I'm not sure exactly, but I agree, like March or something, it seems like to me as well.
Yeah, it's probably March when we're like, oh, okay, yep.
Hit it 3 times there, yeah.
Yeah. So since then, I guess since March, 1, 2, 3, 4, 4.5. So until then, I'd stay bullish. I think that's our key indicator. You need to watch that every day, or track it. Obviously you don't have to look every day. If the market's up, it's staying above the 50-day. But when we do get those little drops, kind of see where the 50-day is at and track that. So Russell. So the Russell went from 4 to 8.1. So I think this is the the modeling we can kind of focus on. So we have our 50-day SMA on the SPX, and then I think Russell's our next one. So typically, and so the typical pattern in like a state 1 is to kind of climb up here, find resistance, turn around, sometimes test that support. Obviously, this is a key support area that you want to watch as it, as this, the days start ticking here. So staying above that's very bullish. It stays above, expect it to run up to that first and second target area, find resistance, pull back, run up, find resistance at 3, kind of, and turn around and do pull back from there. That's the typical. Obviously SPX, the one, hold on. All right, I'm getting feedback, I think, from Bob. SPX obviously broke above that 3 and then turned that into support and just kept going. So so from here, the key area, if you look at it, 2350, and we go back and we were talking about, we've been talking about this for quite a while, this range bound Russell. So when I look at this area, it's basically like the high there is like 2360. So right in between 1 and 2, if it can break above that, we expect it to kind of run up there. If it can break above that and break above this channel that we had, that'll be very bullish. Break above and hold, obviously, not just break and turn right around. So this one's been going sideways for a very long time, February. So, when it breaks out of this, I'd expect, pretty big move one way or the other. And it's, we're getting closer to the high side, but, until that, it can break out of there, I would say, we're going to just say it's range bound, but I think that's a good long-term indicator. Other than the 50-day, can the Russell break out of there? So let me clear that. Okay, so we expect it to kind of run up here, turn around, support, and then try and make that pass up past that 2360 area. It's right between our two targets. So that's a very key level, I think, for IWM on the upside. And then, downside, obviously you want to see it stay above the support. If it doesn't, if it breaks, then, then your next level support is the stop loss area, and you can get a good bounce out of there sometimes. So until, I just say going forward, 50-day, I keep harping on it, 50-day SMA for the SPX. And then, I kind of watch this pretty closely, the Russell. NASDAQ's off, it turned that target 3 into support. So it's pretty much doing the same thing that SPX did, it's kind of running. So overall, very bullish, that everything's back in state 1. I think the key right now, these can keep running, obviously, making new highs. But you can see here, had a real problem getting over 3, which typically, it'll turn here and go down into like a pullback state 2. Obviously, it, popped above and then, tested that support again, and then really just took off. So that's your key level of support for NDX there, that 4750, 14,750, sorry. So that's the overall market. I'll open up to questions, comments. Anyone? Yeah, we do have that. They've been talking up the jobs report Friday. Yep, there's Dave. We're on the same wavelength. I was just thinking that, Dave. So yeah, we are. There are. The one thing I've been talking about for a long time that will take this market down is raising rates. I'm not sure about tapering, how much that'll affect it, depending on the messaging, but definitely raising rates will cause this market to turn over. So they've been talking up the the jobs report on Friday. I'm not sure why, but like as a key milestone or whatnot. So I think the ADP came out and severely missed, but that's kind of that doesn't always correlate with what comes out of the Department of Labor. So so that'd be something to look forward to. But I think really the messaging from the Fed, the last we had talked about it. We didn't expect anything out of that meeting, and nothing came out of it. I still think inflation is going to be the cause of the rate raise, and they're still saying it's transitory. I don't believe it is. It's just a matter of when they I know everyone's feeling the inflation, especially when you go to the grocery store. I mean, one example of this, besides I think I told the bacon story, like last week or the week before. I rent right now, and when I signed the current lease, it was between then and I think it was a year ago, a little over a year ago. Then and now, the apartments have gone up $500 per month in rent, and that's just crazy. So that's just another little tidbit of actual inflation affecting us real people, and they're just kind of saying it's transitory or whatever. So it's very painful for some people. So a lot of people, especially if you go to the grocery store and things like that. So anyway, good comment, Dave. Anyone else got questions, comments? All right.
Yeah, Josh, this is Winslow. Quickly, when you were doing the new lows and it came down, if you go back, that was the third spike up. So
Yeah.
you could draw a line on that and say that's kind of the line in the sand. If it goes up above again, maybe it'll keep going.
Yeah, like a trend line. It definitely has been building a little. That's the highest it's been since the
Right.
pandemic low. So it seems like we're getting, I talk about this being like a flat line, and you can kind of, talk about it like being an earthquake almost, like little tremors coming, getting bigger, and
Right.
that's a good point. I would expect the next one to be higher, and depending on what geopolitical. Obviously, we have the disaster, internationally going on, but I don't think that affects the market very much. But I think inflation's really the big thing, and then if anything comes out of this, like Arizona audit type stuff, that could, what drives the market? Lower uncertainty, right? So if there's any political uncertainty, economic uncertainty, that really is what drives the market lower when people are uncertain. So that it's definitely interesting to see those spikes, and you can go back in time and look at different you had a build up here in 2020. It seems like it does build up, not always, but typically September's a bad month. So just keep that in the back of your head, but not always. But I think generally it's one of the worst months as far as stock returns overall. I'm recalling that from memory, but I saw it a while ago, but I don't have that like stat sheet in front of me. The mutual funds that used to come around when I was a broker always had that type of thing. So yeah, so good point, Winslow. Thank you.
Thanks.
Yep. Anyone else? Questions, comments? Okay. All right, we'll turn over to Shawn for earnings analysis.
All right, good deal. Yep, I'm here. So thanks, Josh. What I'll do is I'll share my screen with everyone. Give me 1 second to pull it up. So I have the first outlay of the numbers for the Q2 2021 earnings report. So we haven't dug too deep in these numbers as of yet, but these are the numbers put together. And the best way to represent what we had in Q2, in my opinion, was to try to make it relative to the previous quarters and see if we could look at some analysis that way, and then possibly come up with some conclusions moving forward, and see if we can kind of improve some of the earnings trades. So if we look here in column E, we can see the Q2 2021 report. So top to bottom, we can see the total gain or loss. In this instance, it was a profit of $54.56. So $5,456 was our total gain on all of the trades as a whole. And then we can also see a profit factor of 148. And this was based on a total number of 68 trades. So 68 trades, but we still do have 4 trades open and 1 trade upcoming. So overall, we could see we were running a profit. I did some extra little analysis on the side here using the ROR percentage and the profit or loss per day. The ROR as a whole was 0.016%. The profit and loss per day, 12.90, or $12.09, excuse me. But one interesting thing that I had noticed when I was running these calculations is if I look at my total profits versus my total risk here, I can see that I come up with a percentage of about 7%, 6.9% essentially. So that's showing you that over the course of the quarter as a whole, you know, we returned a total of 6.9% if you traded everything and you still had a couple of trades outstanding. So, you know, fairly, you know, a decent return in my opinion for the quarter. But then when I come down and look at my win percentage rate of 60%, that is fairly lackluster in my opinion. You know, when Josh, myself, Joe, and Ashok, we talked about the studies and the different trades that we have available within the platform, you know, for those high probability trades, I believe we're looking for 75%. So still decently shy of that percentage if you're looking at an overall win percentage of 60%. In relation to the previous quarters, right in the middle, so not big change there. The major change obviously is for this row, you know, this row 8, we did reduce the number of trades. So we went, you know, around from middle 200s to 68. So we're able to reduce those number of trades significantly. You know, one key factor that I heard about today and I thought was pretty interesting was if you look at how much money you're making per trade. So one way to show that would be, let me just run this formula real quick. If I take my total gain and then I divide that by the number of trades that I did in the quarter, you can see $80.24. That tells you on average you're making $80.24 per trade profit. So, you know, again, in my opinion, not really spectacular, you know, somewhat lackluster in my opinion. I would hope when I'm trading to make more money than that per trade. You know, if you do that consistently, you're going to be, you know, you're going to make money and have a profit, but is that really the profit that you're looking at? So a little bit of conflicting numbers there, in my opinion. You know, I look at the 7% and then I look at the $80 per trade and, you know, it doesn't seem that well. So, you know, I want to compare that though to the Q4. So let me do the same formula for the Q4. If I take 36,000 and then divide that by 281, $130. So $130.48 per trade for the Q4, and then it dropped down to $80.24 for the Q2 2021. So a big difference there. So the reason I, you know, let that be known is obviously with the 60% win rate, you know, and some other factors that we put into this analysis and this earnings plan, you know, that just leads me to believe that we do have some more areas that we want to try to go into these earnings trades and, you know, basically optimize these trades, whether it be optimizing it based on the trading strategy or how we're selecting the trades or, you know, how much profit we're looking to get out of the trades or the stop loss. So all these different key metrics that we want to make sure we go in and analyze a little bit further and see if there's ways that we can fine tune, you know, some of these trades. So, you know,
Shawn,
that's the general. Yep. Go ahead, Bob.
were these live trades? I'm a little, or were they mechanically captured in by the system?
Sorry, yeah, these were the ones that I put in the virtual portfolio. So anytime the trades had come out as a pre-alert in the actual platform, and then the trades were confirmed, I would put them into a virtual portfolio, and I would put them into each of the different segments. So if it's a bullish pre-runner or a vol crush trade, I would put it in its own portfolio and then track it that way.
So you put it in with profit targets and loss targets as well?
Right. I put it in there with the profit targets and any of the stop loss targets, like what we would have when we actually put out the earnings plan. So, you know, for some of your bullish pre-runners or your bearish pre-runners, the 25% profit would be the profit target with 100% stop loss. Those are the exact numbers that I would put into the actual virtual portfolio. And then for the trades like the vol crush or the non-movers, I would put that 15% of my max profit in there. And then I would put, you know, essentially an unlimited loss because I would either just let those options run out. Now, that being said, if some of these trades, like for our bullish pre-runners, if I'm in the trade and the trade comes up to the earnings announcement, I get out of the trade no matter where it stands, you know, right before the earnings announcement. So if the earnings announcement is, you know, today, let's say after the market close, I get out of that bullish pre-runner today before the market closes. and then I don't trade it through earnings because that's not the trade set up for that particular trading earning style.
The only thing that I followed closely, and I have followed it closely, is the bullish pre-runners. And I've come to the conclusion that the actual results for win rate are materially worse than the back tested win rate. So, I mean, the only thing that I've traded is a better than a 90% win rate. And
Right.
you know, it could be a failing on my part, Shawn, but I'm sure not getting 90% win rates.
On
Can
those,
you,
right? Yeah.
Can you
Go
click
ahead.
on bullish pre-runners?
Yep. Yeah, I'm going to go over that one first. I'll pull that one up
Okay.
next. And yeah, I'm not sure. We would have to look at those to see, but you know, we do have a difference in some of the trades that I noticed when I pulled them out of the virtual portfolio, you know, versus what I traded live. And you know, obviously, if you have a 25% profit target, let's say, in the, you know, if you get into the trade yesterday and you have 25% profit target set up and the trade is trading today, and let's say it hits 25%, you know, at 10 a.m. Eastern time, it's going to execute. It should, if it hits 26%, it should execute you out of the trade, and then you made your 25 or 26% profit. Now with the back testing and with, you know, the virtual portfolio, all of the data is pulling it out at the end of the day. So if the stock does continue to rise, obviously, you know, I could be getting out at 45% at the end of the day when in reality, you know, I was executed at 25%, you know, through my Thinkorswim or through my trade here.
But the
Do you
win
think
rates,
that's part of the
win rates would have been the same, wouldn't they? I can understand the percentage return being different, but not the win rate.
Yep, those win rates should be, I believe, right? So if you get out or if you don't get out, I mean, yeah, those should be the same. So we'll have to look at those. So we can look at those later as well and kind of analyze those, you and I, if we want to do that at some time. So yeah, if I click on the bullish, say again.
Thank you.
So yeah, no worries. So if I click on the bullish pre-runners, you know, similar to what Bob was saying, you know, we pulled out a certain group, and when Josh and I ran these earnings for this particular Q2, we used a similar style. I believe we used only, you know, it had to be, you know, 90% win rate or above during the back testing and a certain profit factor. Now, even though we pulled those symbols out and those are the symbols that we're trading, that doesn't obviously mean that they're going to all run 90% or higher, you know, and I know we know that. But we can look here for in column E again, Q2 2021 for the bullish pre-runners. You know, what Bob was talking about, you can see here, I have a 78% win rate. Now I still have one trade open. So even though we use 90% back testing win rate as our metric, you know, in live trading or in the virtual portfolio, 78% is the win rate for this particular bullish pre-runner strategy. Now, again, coming from the top to bottom real quick, 38.26 is the total profit that we made on the trade, 3.73 profit factor, and a total of 19 trades. So we can see that, you know, executed or, you know, are going to execute 19 total trades. I have one trade that's still open, but we can see out of those trades, not out of those trades, but including with those trades, 34 trades were estimated or not confirmed at the time. So, you know, we only traded or are going to trade the 19 trades. So we can see that we were able to, you know, almost, you know, what, 60-something% were not traded based on the dates not being confirmed at the time that the trade would have been valid. So comparing to the previous quarters, we can see that this quarter, based on profit factor, is much better. Based on our win percentage is much better as well, you know, 64, 53, and 78 respectively. Some of the metrics over here, like we talked about, the ROR percentage, return on risk percentage, 0.12%, and then our profit and loss per day, 27.53. Again, you know, the metric that I like to look at is if I look at this number here, my total profits divided by my total risk, you know, 16.7% for a quarter, in my opinion, again, is a really good return. You know, we're obviously getting a lot better here with the bullish pre-runners. And again, we're in a bullish market, but, you know, that being alone, we want to look at that extra little metric. I can do my total gain divided by, you know, now we did 18, so we're only in 18 trades right now, divided by 18, almost $212, you know, profit per trade. So that's, you know, 280 was what we were looking at as a whole, and now we're at 212, which in my opinion, yeah, obviously we're getting up to a better number at that particular point. That being said, Bob, yeah, go ahead.
Oh, I'm sorry. This is Lee. I didn't mean to interrupt. Finish your thought, and then I have a question, please.
Yeah, no, go ahead, Lee.
Well, if your object is to make money doing this, then I look at row 3, total gain net loss, and quarter 4, you made $18,000 profit. Quarter 1, 1,400, and now quarter 2, you make 3,800. If your object is to make money, why is it you don't want to be back doing things like you did during quarter 4?
Yeah, no, and I think what we've talked about too is the number of trades that we have available in the plan at that particular time. I think in Q4 we did have, the market environment might have been a little bit different. This is just speculation on my part because the market was not coming out of COVID, but COVID was around February, Q1, Q2, 2020. So it almost seems like coming out of that, right? That's when the market had that big run up. And then we noticed in Q1 of 2021 and Q2 of 2021, we had that kind of uncertainty of what was going to go on with these earnings. Again, that's just my speculation, but I agree. Profit wise, 18,000 versus 3,800 is much better. But if you do look at the trades, we dropped the trades down substantially, almost by, 3/4 is what we dropped them down by. Another, like I said, that metric earlier that I'd like to look at is let's look at the total gain divided by the total number of trades. So 238, and then if we do the total gains here, which I think was around 220, right? Divided by 18. Or 212. So pretty close, still you want to I'd rather make 238 than I would, 212, but, we're able to reduce those number of trades. So yeah, I think we had a more of a bullish market maybe at that time. I have to look at some of the analysis in the individual portfolio to see where some of those trades, don't line up. Another key metric that I looked at, and you can look down here in row 16 is, maximum capital per trade. Q4, we had some trades that were going for around $4,000 just to get into the trade, probably a trade like Amazon or Google. And a lot of those trades were taken out just based on us being a little more restrictive on our stock list. And, you can see here, 1,800. So, you could take that as a better metric to be able to get into more of these trades, whereas some of these trades, you might have said, hey, Shawn, I'm not going to pay $3,000 to get into a long call or $4,000, So we got to look at these a little bit further, but that's kind of the goal over the next couple of weeks is to see if we can, get these numbers back to what they were, get some of our profits higher. Our win percentage here is good, but we want to kind of make some shifts to see if we can make these things a little bit better.
All right. Thank you, Shawn.
I know that's not the perfect answer, but that's all I got, right? But no worries. So Bob, what was does this seem relative, Bob, to what you were looking at, or what were your thoughts?
Shawn, this particular quarter, I tried an experiment that I think failed. I used those valuation metrics from stockcharts.com to further filter Josh's list. It was not successful. So the fact that I got worse results than you got from the portfolio is probably because of my failed experiment.
Understandable. Yeah, and I know there's a couple people that had reached out regarding talking to them, kind of digging into some of these a little deeper and talking to them, more extensively. So if you want to do that as well, you and I can set some time and kind of run through your results, run through some results that I have here and see if we can come up with something that will, hopefully make it better, next quarter and going forward. And that's what it's all about. We're trying to take these trade ideas and these back testing ideas within Delphian. Not only you guys, but Josh, Joe, and I are trying to take these ideas and obviously make them better. And it's a learning experience. We get some of the good results from the back testing, and those are the results that you guys see. But I think there's always a way to improve it. And if there's not, then that might just be a strategy that we have to kind of push to the side and not trade it, right? So, I think we're going to see some strategies or some of the trading types here that, look like they might be heading towards that course of we really need to make some adjustments or, kind of scratch the idea. So I'm going to show you that too. So does that sound good, Bob? We can maybe set something up.
Sorry, I had to unmute. Yes, I'd love to work with you.
Oh, no
on it.
worries. No worries. Because yeah, not only do I have, these totals here, I also have I exported all the data from my virtual portfolios. So from each of these subsets, I have that data exported. So I have the actual trades in there as well. So I can look at the trades and we can kind of analyze, the entry prices that I have on the trades, which are obviously going to be, from the Delphian platform, and then the exits as well, as long as all those other metrics that we can look at too. So there's a lot of different stuff we can analyze a little bit deeper than just on this call. So so really looking at these different metrics here again, the ROR, 0.12% for the bullish pre-runners, 27.53, profit and loss per day, one trade still open. If I go over to my bearish pre-runners, this one, we had a total of 4 trades that were valid based on, the metrics that we were looking for when we did the bearish pre-runners. So we had 4 trades total. 1 trade actually was confirmed. 3 trades down here in row 21 were unconfirmed. So only 1 trade was valid at the time of entry, and that trade was a loser. So we lost $734 on the trade, and the trade actually cost $1,010 when we did the trade. So we were in the trade for 12 days. So these are all just relative to one particular trade, and then our metrics over here as well. ROR negative 6.06%. We lost $61.17 per day. So this is one example of a trade type that not only did we reduce the number of trades, not from a lot to a little, but our win percentage is obviously 0, and we want to make an adjustment. Either in a bullish market, maybe having these bearish trade types isn't the most optimal, or trying to come up with a different maybe trade design versus just doing a long put. Maybe there's another trade setup that we could do that might suit that trade a little bit better. Going over, my screen's partially blocked due to Zoom, but this is the this is the vol rise trade. So the vol rise, a long strangle, another trade strategy that we need to look at a little bit further, in my opinion. We can see the win rate. So I'll start again top to bottom. $78 was the total gain or profit on this trade, a 1.11 profit factor. So we have a total of 8 trades that we're going to execute. 7 are completed. So we have 3 winners, 4 losers, and 1 trade is actually still open. But we can see that we have a 38% win rate. So really subpar, in my opinion. We look at our total profits over here and our risks regarding our ROR. ROR is 0.013%, and our profit per day, $1.20. So pretty subpar, in my opinion, obviously, not only just with the win percentage, but with some of those other metrics as well. Let me look at, see if I can click on, I don't know if I can get over to it without changing. Give me 1 second, I'm sorry. Let me see why this is doing, I can't see, I know there's something blocking my screen is why I can't get to it. And everybody can probably see the whole page, right? I just can't see the whole page. Vol Crush is our next one. So the Vol Crush trade, I was surprised by this one, actually did really well, better than expected. So remember, the Vol Crush trades were taking the volatility crush that's coming out of earnings and taking advantage of that crush. So this trade, again, is used to get in and then get out the very next day. So, that's why we have here average days in trade 1. So for Q2, we can see we made a profit of 2079 total. And then we can see a substantial profit factor, 7 total trades. We had 6 winners and 1 loser for a win percentage of 86%. And then we can see over here on the side some of those other metrics like we talked about. We're talking about, our ROR percentage, 3.12%, and then our P&L per day, $297 per day. So obviously, with this trade setup, it can be fairly risky if the stock moves outside of the expected move. but it can be very rewarding if it stays within. So we can see those metrics play out kind of in this example here. Let's see.
Shawn, was that on the vol crush, was that the butterfly or the double calendar?
That was just the butterfly. Yeah, I still have to run the other metrics on the double calendar. I just haven't been able to do that yet. So there are a couple of the trade setups that Josh and I had talked about before. For the bullish pre-runners, I have ran the analysis and set them up in the virtual portfolio using, a bull put spread, using a bull call spread. So I have those metrics. I just have to put those together. But for the vol crush and the non-mover, like Sudhir mentioned, I do want to run some of the double calendar trades on those to see how those results come out as well. And then we can run some more analysis on there. So I haven't done it yet. It's in process.
Okay.
So you and I can look at that maybe on Friday together.
Yeah.
And the good thing is for the vol crush, before we're talking about 32 trades, a decent amount of trades to recreate into the double calendar. Now this quarter we have 7, so that's more manageable in my opinion to go into the virtual portfolio and recreate those results and see how they lay out. For the price movers, again, a long strangle, we can see total gain loss was a loss of $456 as a total. There was a total of 3 trades. So we had 1 winning trade, 2 losing trades for a win percentage of 33%. And then basically, we had 1 trade that we did not get to trade. And then we can see our different metrics over here. Again, we're talking about, the ROR percentage of a negative 0.53 and $19.83 loss per day. So again, the long strangle with the vol rise and the long strangle with the price movers, 2 great examples, in my opinion, of areas that we need to, reconstruct the trade design, come up with some other ideas to see if we can, make these results a bit better. When we do have the small sample of trades that we can get into, what can we do to make these trades, make it, be a 70% win rate versus a 33% win rate, or 75 obviously is optimal, but just some areas that we want to kind of look at and dig a little bit deeper. Price on movers, we can see this was a loser as well. Overall, lost $508 through the course of the quarter. A total of 15 trades. We still have a couple trades pending, but we can see seven winning trades and 5 losing trades. I don't think that win percentage is right. Sorry. What did it do? Oh, it did it off of the 15, but those 15 trades aren't done yet. So really it should be off of 12. Sorry. So the 58% win rate currently, so what we can see is we can actually look at the different metrics again over to the side, negative 0.06% ROR and loss $8.61 per day. So again, this is another one that, we let this trade go out. So the non-movers are expecting the stock price to come back within the range over the course of the time for, the trade setup. So we were in this trade on an average of 4.92 days, but we still took a loss on this trade strategy. So again, another one that we might want to look at to make some adjustments to. And comparing it to the previous quarters, 69%, 67%, and now 58%. So we got more selective in the stocks that we were trading, but our win percentage dropped down. So again, we need to do some more analysis on that. Our bullish runners. So column E here, $1,106 profit for that set. And then we can look at the total trades. So we had 9 total trades, 7 winners, 2 losers for a 78% win rate. So again, similar to the bullish pre-runners, bullish runners, a great win percentage, fair profitability on those number of trades. But then we come over here and we look at the ROR percentage, 0.14% ROR and $16.26 per day for your profit. Again, another metric that I talked about before is, our total profits divided by our total risk, almost 9.8% for the quarter. Not many trades to go by, but, that seems like a fair return when you're looking at a quarter basis. If I run that same metrics we talked about earlier, looking at our total gain divided by our number of trades, $122. So we can see that, you know, on Q2 2021 for the bullish pre-runners, you know, we had, or excuse me, for the whole total set, we had $80. And then for the bullish pre-runners, I think we had above 200. And then now for the bullish runners, we're at 122. So even though our win percentage is good and our return percentage for the quarter is good, the dollar amount per trade profit is just a bit lower than what I expected. So I would want this number to be a bit greater. And that might be changing, you know, the actual trade type, doing the bull put spread like Josh has spoken about before, or maybe, you know, some other type of trade setup, or, you know, trying to be a little more aggressive or running different stops. So we got to kind of look at that to see where we can make some of those changes. And then last but not least, the bearish runners. So the bearish runners here, $65 total profit. We can see that we had a total of 6 trades, 3 winners, 3 losers, 50% win rate. Again, pretty subpar. I mean, I want that to be above 75%. We can look at the other metrics over here, a 0.017% ROR, and then only a $1.30 profit per day. So pretty subpar on this section as well. So, you know, that just, again, you know, shows me that there are certain areas that we want to make sure and make some adjustments and come up with some creative ideas to see if we can, you know, get these trades better for the next quarters upcoming. We've made some big adjustments in areas of, you know, having a more selective stock list, possibly coming up with some other trading strategies and setups for these different trade types. And, you know, we anticipate that those are going to help us increase a lot of these metrics moving forward. But, you know, as with back testing, it's a learning process. So we're learning along the way. And, you know, obviously any feedback you guys offer is great. We appreciate it. And we always test that and look at it as well. So, you know, that being said, any questions, comments, or ideas, thoughts regarding any of this?
Are you going to post this on a shared drive?
Yeah, I will. Once I make sure everything looks good and it's formatted properly and stuff, I'll post it up there and then everybody can download it. And then same thing with the, hopefully with the virtual portfolios, I'll be able to post those as well. So I have a lot of those sheets that I've kind of been working off of to compile this data. So I just want to make sure I don't have any random numbers and any weird cells or anything like that.
Okay, because I just like to take a closer look at my own pace. So
yeah, most certainly. And I think that will be great because I think that'll help you with, you know, hopefully it would help you with your trading. And then obviously if you see some things, you can come back and we can discuss those as well. And then you and I'll get together on Friday so we can look at them pretty deep then too. So
now one of the things that comes to mind is if your back test is for these, you know, whatever, bullish runner or bearish runner or pre-runner, you guys are going back testing like the last 10 quarters or something, correct?
That's correct. 2.5 years, yes.
2.5 years. And just an idea, I'm wondering if there's a difference if you go back test just the seasonal. In other words, you're going back 2.5 years linearly, right?
Right.
But we're coming up on the third quarter earnings, which are reported in the fourth quarter. If you went back and just looked at third quarter of last year, third quarter of the previous year, third quarter of 2018, and so on, instead of linearly back certain number of quarters, I wonder if that yields a different result. You follow what I'm saying?
I do, yeah. Yeah, I think that's fair. That's a fair question to ask, and that's something that I haven't, you know, thought about testing it that way, and I think it's a good idea. You know, I talked earlier with Joe, and we had discussed something similar, right? You know, we're testing 2.5 years or 10 quarters, you know, and during that cycle of the past 2.5 years, the market's been fairly bullish, right? So that would obviously say, hey, that's what we're getting some of these big numbers out of these more bullish trades, these long call type trades. So taking some of that into consideration as well, and then trying to run the analysis on some of those bearish trades is something we're looking at as well. But no, I know exactly what you're saying. Taking Q3 and then maybe testing the past 6 years for Q3. 10 years might be a little too far because I think Josh has mentioned this before. You know, what Apple was 10 years ago versus what Apple is today is completely different. So, you know, their earnings, should obviously show different values as well based on that. But there is a number that we could start at and then kind of expand it from there. But I think that's a great idea.
Exactly. So I'm be curious. I mean, let's take Apple for an example. If you ran it 10 quarters back linearly, is it? I'm just making this up. It shows to be a bullish pre-runner. But if you ran it 5 years on a Q3 earnings, maybe it doesn't. You know what I'm saying? Because every company has a seasonality to it, right? They have a fiscal year and their year ends at a certain time, and they're always trying to do beat earnings maybe more on one quarter versus the other because the whole year isn't showing up, right? So, so there may be some seasonality there that is worth taking into account. I don't know that you can really look at, you know, whether the overall market is bullish or bearish, because, you know, then you get into, okay, we're going to predict that the market is going to be bullish for fourth quarter. And in these conditions, here's what the stock does. And then let's say the market turns down, right? You really can't, you really don't know what the condition of the market is. However, you do know the seasonality of the stock, right? If there's a tendency every third quarter report for it to make a bullish run, and there is in the 10 quarter linear analysis, you know, that's a more likely bullish runner than, let's say, in the 10 quarter analysis, you saw it's a bullish runner, but in the seasonality analysis, it's not so much, right?
Right. Yeah, that's definitely something I do. Yeah, and that's definitely something we could look at, because I think, you know, you've traded it and I've used it before as well, the seasonality within Delphian and seasonality in general. I think we know that there is some, you know, proof behind that, right? The seasonality trades. So using that type of analysis, I think with these earnings would be an interesting, you know, find for us to use and see how those numbers compare.
Yeah, that's my initial thought.
Yeah, it would be interesting to see if we could find some analysis that way. So, no, yeah, don't disagree. And like you say, you know, I think, you know, it was mentioned earlier today on another call as well that, yeah, you can start looking at, you know, the trade setup and what you're doing for the Q3 2021 and saying, okay, you know, maybe we want all these stocks to be in, you know, state one or in a bullish state, or we want the market to be, you know, in a bullish state, or all these indices to be in a bullish state only to do these bullish trades. And like you said, you can start getting into a rabbit hole once you start doing that, because now you're just adding more analysis on more analysis, more analysis. And, you know, where does it end? I don't think it would end if you kept doing that. And it's really hard to predict, like you said, where's the market going to be, you know, 30, 60 days from now, you know, but, you know, trying to find creative ways to back test and find some analysis that might match what you're wanting to do, I think is my goal, you know, because, you know, again, we have a lot of trades here, 68 trades, decent number of trades when you look at those and with the studies too. So, you know, if you can find creative ways to pull some trades out and, you know, hopefully profit from them, I think that's great. So, yeah, we can do some more analysis like that. You know, David just sent over a message regarding the total number of trades. So this row 8 here. So, you know, basically we're looking at Q4. We had a total trades. These are trades that were confirmed or that were entered, not including the estimated trades, but 281, 255, and a significant drop to 68 for this particular quarter. So as everyone might remember or might not, you know, we did some work, Joe, Josh, and I, taking into account, you know, different metrics like a bid-ask spread of the option, the volume of the options, the open interest of the options, and things like that. And if the stock or the options didn't meet our particular criteria, we took those stocks out of the stock list. So we were able to bring a stock list, I think, of above like 400 and some odd stocks down to, you know, maybe upwards of 200, maybe around the 300 range. So we took out, you know, almost 25 to 30% of our stocks. and that helped us drop down this total number of trades. So, you know, in the previous quarters, we had a bunch of trades that everyone was trying to do to be able to track all of these earnings. And we felt like we had some trades in there that just shouldn't have been in there. And we were able to condense the list down and get a better list, hopefully a high probability and a higher profitability type list. But, you know, as we can see, we whittled the list down, and, you know, from last quarter, it barely squeaked up our win percentage. It actually dropped it down from Q4. So I think it helped in certain areas, but it didn't help in others. So we're really going to dig deeper into that way. You know, if I look at my maximum capital outlay per trade, you know, for one particular trade, that dropped down, and then the average capital per trade dropped down as well. So, you know, we dropped about $300 from, you know, our average to our average now. So I think that is going to help, you know, be able to get into some of these trades, but I really want to be able to get this win percentage up. I want more winners in that set, and I want to help reduce some of my losers. And so those are the different things we're going to be looking at over the next couple of weeks.
Shawn, as someone who trades the whole plan live, I found this lower number of trades much easier to manage. When you know, I've been trading it live for a year now, since last year, and this high number of trades, it's a lot to manage. So I found the lower number much easier to manage. And, you know, I did find, I emailed you guys, and I don't want to, you know, interrupt your presentation, but, you know, we can discuss more on Friday. I did find using spreads instead of straight long calls and puts, I found that doubled the profit factor.
Oh, nice.
Yeah. And that was in my email. We can talk on Friday.
Yeah, and you're able to keep the risk pretty similar. The risk per trade was pretty close to the same.
You can get into more trades. You know,
more trades.
For example, let's say Shopify comes up, which is a very expensive, or Wayfair, which is a very expensive stock, and just a straight long call that might be recommended on the bullish pre-runner, as an example, might be, you know, $20-30 or, you know, $3,000 for
right.
one call, which puts it out of my risk parameter. But if you do a spread, you can actually do that trade.
Right.
And I found the spreads, they take a little bit longer to hit the 25% target, but they lose so much less on the losers that your profit factor, if you look at my email, your profit factor doubles.
Right.
So
yeah, we'll have to look at that.
Yeah, we'll talk on Friday. You can review my email that I sent, but that just straight long calls and long puts are a really unforgiving trade. I found after doing thousands of them, Delphian recommendations and my own. It's just a very unforgiving trade. So
hey, Dave.
That's it here, Bob.
Yeah.
Dave,
Yeah.
Dave, can you hear me?
I can. Can you hear me? I'm kind of I'm on travel, so I've been kind of muted most of the time. Go ahead.
Was that Dave that was talking?
No, that was Winslow.
That was here.
I'm sorry. When you did the spread, if the position went down, did you take a profit on the short and leave the long in place?
No, when I did the spread, I traded it exactly like I would have with the long call. In other words, like a bullish pre-runner, you're supposed to exit before the earnings. So I would exit the spread before earnings if it had not hit the 25% target. And I found that the ones that were loose. And by the way, I did the long call in addition on TOS paper account, right? So I was able to compare side by side, and the spreads, they take a little longer to hit the 25% target. Maybe it has to be a bigger move, but the benefit is on the losers, they lose significantly less, or even they make a little bit of money, and the end result is your profit factor more than doubles.
Okay, this is Dave. I wanted to comment on that though. So I'm on not on mute, but what was the width of your spreads? Was it the market maker move width, or was it something significantly different?
Oh no, it varies. Because stocks have different spread width. I mean, like some are 250 strikes and so on and so forth. And it really doesn't matter. What you do is you just size the spread width so that you hit your risk. So for example, if one strike spread is $5, I might go to 2 strikes and that's $10. My max risk is $1,000, right? So that hits my max risk with 1 spread contract. Now, I may have to go to 3 strike width or something. I would size the spread based on try to hit my max risk.
Okay, but then the price of the stock has a great deal of impact there, as does the whatever the implied volatility is or isn't for that period too. So,
well, that's why there's no set width. The width changes.
Yeah, I get that. I think I get that. It would be hard to figure out a standard rule of thumb way to play that though. Maybe.
Yeah.
Could you send me your email? Because I don't know. Send me your email. I'd like to look at it. Thanks.
Who is that speaking?
Oh, sorry. You probably can't see my thing on, but yeah, that was Dave. Thanks.
Dave?
Yeah, you guys can
Yeah,
message
Dave,
if they're you can send them a message directly in the chat.
And I did that too, as a side note, Sudhir and Dave and everyone else, obviously. Josh had talked about this before the quarter started. So some of the bullish pre-runners and the bullish runners, I traded in the virtual portfolio as we have set up with the long call, but I also traded those in the virtual portfolio. I set up another portfolio for a bull call spread and a bull put spread. So I traded 3 different strategies on some of those bullish trades in our earnings plan. So, as you can see here, there's a lot of trades here that I have and a lot of analysis that I've done for these particular trades. But once I can get in there and analyze those and put those on paper for everybody to see, I'll share you guys with some of those results. I'll share those results with you guys as well. But I did that same analysis. So hopefully I'll be able to take something like this bullish pre-runner for the long call and have it set up where we have the bull call next to it and the bull put next to it, and we can compare the differences between how the trades played out, not only looking at average days in trade, but win percentage and the different metrics such as that as well. Because I agree. I mean, as I've mentioned before, when I traded commodities, it was always long calls because it was the best way to it was not the best way. You can make the most money trading those long calls in some of those commodity environments, and obviously in the stock environments as well. But working with Ashok and working with Delphian, I found those bull call spreads like he trades and the bull put spreads like Josh has been talking about. Just they're not going to make you that. They're not going to make you rich over a short period of time. But if you're consistent and you trade them consistently, it seems like they just keep pulling those profits into your account. In my opinion. So if I can run more analysis on those and provide those to you guys, that's what we're going to do. And then if some of those strategies work better for some of these earnings trades, we might have that type of strategy overtake this long call strategy. But that's just something that we got to analyze and make sure it's the right move before we do it. So that's all I had, guys. I mean, I appreciate you listening to me and kind of running through these numbers. With a lot of things here at Delphian, we had a lot of numbers on all these different pages. So, in the interim, before we talk next, if you have any questions or anything like that, please feel free to reach out to me via email or call me, and we can go over them and get them sorted out for you. So I appreciate you guys taking the time.
Thank you. Good meeting.
Beautiful here.
Yep, thanks, Shawn. Good work. And thank you all for attending. And next week we'll review the quarterly studies update. So see how those are doing. Thank you all, and we'll see you next week.